G'day folks, welcome back to Pete's Investing. It's January 19, 2024. This is the Bitcoin technical analysis. We also look at some ETFs including BTC, BITI, MARA and Riot. Just in terms of overall trend, we're looking at the medium term as a bearish outlook, and there is a divergence that is forming, but also one that's been hit. So I'll go through those, and also the trading strategy idea for you to consider. First, looking at Bitcoin. So you can see here for those new to the channel, we've got the weekly, daily and hourly. We'll look at all three time frames. And down here we've got the CCI 400, and it's in a bullish mode, which is our primarily our trend indicator. The CCI 150, our divergence indicator, is also bullish, although there's a slight retrace to the downside. And as a divergence indicator, we can see back here we had a couple of bearish divergence versus bullish movement on the price, and they both fell off. So you would have been wise to take that advice. Over here on the daily, we do have a break below the moving average of the CCI 400, which is a bearish outlook. And likewise, we've got a bearish divergence on the CCI 150 after the price made new highs. And you can see there it's hit our target. We projected it to come down to between a 23 and a 38% as a minimum. The price could always bounce from there, or alternatively can fall much further. And the key area to look out for, if it falls much further than a 61% Fibonacci retracement, and the Fibonacci length is drawn down to that level there and up to that high. If the price falls below the 61%, we're going to have a much more bearish outlook for the Bitcoin price, and in fact it may actually affect the weekly trend as well. On the hourly chart, you can see here more closely we've got a declining CCI 400 still. So both daily and hourly are both bearish. And over here we've got also we did have a separate, and these are independent by the way, these divergence. Did have another diverging CCI 150 versus the price. It fell off, hit our target, again between that 23-38% level. And you can see there the CCI is making new lows. There's no sign of a pullback or a divergence yet. Next, we've got the ProShares Ultra Short Bitcoin Strategy ETF, and that's the ticker BITI. There's no indicators on the weekly. I don't think we've got enough data for that one. On the daily, we do have it for the CCI 150. Again, you can see there's a bullish divergence versus lower lows in the price, and it is making a higher movement on that, and it's actually reaching our target area on the 23 to the 38% level. On the hourly, that's also broken up on the CCI 400 and moving higher. We've also got a bullish divergence there versus the price, and it's actually hit our target on a smaller time frame, and we drew the target Fibonacci from that high there. So it's actually penetrated the 23 and the 38% level, and it's actually reaching now the 50% level. So it could always go higher. And again, if it breaks the 61%, we expect it to break to have higher prices. So to keep an eye on that. Next, we've got Marathon Digital Holdings, and that's MARA. On the CCI 400 on the weekly, that's bullish. The CCI 150 is showing no diverging signs, moving in line with the price. On the CCI 400 on the daily, it's broken below the moving average, and it's showing a bearish outlook. You can see there a big decline on a few red candles there, and the CCI 150 is moving in line with the price as well on the daily. So nothing really, apart from the decline, nothing in terms of divergence on the daily. On the CCI 150, on the CCI 400, sorry, on the hourly chart, it's still declining. There was a bearish divergence there on the CCI 150. It fell off, hit our target, and it's actually broken past the 50% and now stopped right on the 61%. Again, that's a key area. If it breaks below that, we're going to expect further declines. Otherwise, it may possibly bounce from there, so I'll keep an eye on that in the near term. And lastly, we've got Riot Blockchain Inc., which is RIOT. Again, no indicator on the CCI 400 on the weekly. The CCI 150 divergence indicator on the weekly is pretty much moving in line with the price. And on the daily, it's broken below the moving average 400. The CCI 150 is moving in line with the price as well. And on the hourly, making new lows, still declining on the CCI 150, although there was a bearish divergence back here, a couple of them actually, historically, but you can see the latest one fell off, hit our target area, and this one actually fell much further below the 61% level. Now, if you look closely, there is actually a bullish divergence here on the CCI 150 versus the price, and we expect that to break higher. Now, I'm going to project a target on that. So assuming it bounces from there, and of course it could always fall further, So as long as the CCI 150 remains higher than that point there, we're going to consider it a bullish divergence. So assuming that bounces from there, we're going to assume a target area between the 23 minimum to the 38% level. So keep an eye on that in the coming hours and days. So as a trading idea, what we have here is, again, with the weekly, daily and hourly charts, we look at the larger time frames, and here we're going to be looking at trading on the hourly time frame. So here you can see the weekly is still in an uptrend, although it's starting to potentially break down. The daily is broken down on its CCI 400 below the moving averages. Also, we've got a bearish divergence, which means only bearish trades should be taken. So on the hourly time frame, and I'm demonstrating the hourly here, but you can apply the same logic to the 2 hourly, the 15 minute, or whatever smaller time frame below the 1 day you choose. But here on the 1 hour example, I've got here some sell signal indicators shown, and some close indicators where they're shown as well. Now, how do you set this up? Is basically, again, I've just done this for the demonstration of this strategy. You can see here where it's got a sell signal. That's where the CCI 150, which is our divergence indicator, is broken below the 0, and we close it when it breaks below the minus 100. So the entry is the 0 and the close is the minus 100. If you're going long, it's the other way around. It's when it breaks up through the 0 and it closes out above the plus 100. So again, only taking the short trades because the weekly and daily are predominantly short. So you can see here we had a few sell signals here and a couple of close signals because the CCI broke through the 0 and broke below the minus 100. And then we had about 3 different sell signals here, but you'll notice the CCI hasn't broken below the minus 100 to close them out. Now, a couple of things you can do. What I would do is I look at the, let's look at the first one here, for example. It breaks below the 0, so you enter potentially your first short there. Now, the price did fall off, but the CCI itself didn't penetrate the minus 100. So we hold it and wait. Now here we've got another sell signal, but because the price is lower than that price, we don't enter a second lot. I like to average down, or you can set a stop loss if you wish. Now I like to average down, and what that means is if another entry becomes higher than that, then you enter that second entry. So you'll notice that'll be our first entry potentially in this example. On this sell signal, it breaks below the 0. We don't enter because it's lower than that point there. The third sell signal here is below the minus the 0 line. We don't enter it because it's lower than that point there. The price goes up. Now again, you can have a stop loss if you wish, or if you want to average down. This point here is higher than that point, so we average down. We enter another lot or another contract. So the average price now raises to that midpoint there. And in this example, you enter a second lot there, and in this example, the CCI breaks below the minus 100 and it closes out. Now this also happens to coincide with the bearish divergence, you'll notice, versus the higher prices. So it's actually giving you more reason to short it along with this bearish divergence. Now in this example, it falls and it closes out. So you can see here the CCI is still falling off, and in which case the CCI 150 is also well below the minus 100, so not yet ready for another short signal. And again, don't enter long until we see the daily move into a more bullish mode. So again, if I wanted to go back to probably around October, so you can see there between October to the end of December was a long period, and that was in line with the weekly as well, going long. So during that period, you would have taken long trades only. So if I zoom out to November, let's go to the middle of November, and if I set some buy signals, you can see there we've had a few buys and closes. In this case, we had a bearish divergence, had a few buys there. Again, making sure you use the rule where you average down. If you're going long, you wait for the price to drop far enough before buying another lot of contracts, and there you would have entered and closed out that first set of contracts. Enter another lot of contracts, close it out there. Here you would have entered the first lot, maybe not entered those, and you would have closed out there. So this is just one simply trading strategy you can use, and it works with the average down approach, or you can use a stop loss method. So again, there's many various ways of trading, but I like to make sure I'm trading with the trend. Remember, the trend is your friend. So currently, predominantly the daily is in a downtrend, the hourly is in a downtrend, so take only short trades. So now we'll look at some key economic developments or viewpoints, and here we've got some demand and adoption reasons or trends, and that's where institutional interest remains strong with increasing investment from hedge funds and asset managers. Technological advancements with taproot upgrades enhancing privacy and scalability. We've got regulatory landscape evolving and regulations globally, with countries offering clarity and others remaining cautious. And macroeconomic conditions, rising inflation, potential interest rate hikes by central banks impacting risk assets like Bitcoin. And current considerations to be aware of, the volatility remains. While recent stability, volatility is inherent in the crypto market, and sudden price swings are a possibility. And just be aware of regulation watch. Regulatory actions by major economies could significantly impact Bitcoin's future. Institutional influence, growing institutional involvement could bring stability and drive demand, but also potential manipulation risks. And again, we talked about technological advancements, ongoing development of scalability solutions, and new use cases may enhance Bitcoin's long-term viability. That's just a bit of some data sources for further reference if you're interested. So again, that's been the analysis for Bitcoin, both a technical viewpoint as well as economic outlook for BTC, BITI, MARA, and RIOT. Remember that the current trend is pretty much medium-term bearish, so avoid taking long trades, and watch for that divergence where they happen. So if you like the video, hit the like and subscribe button, hit that notification bell. Thanks for watching, and see you in a future video.